trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes.
Just because you're here, I'm coming on early. And I'm not trading NUKK. I'm looking at this one. Let's just trim this down a little bit because this was Thursday, Wednesday, Tuesday. You could have bought this at $2. NUKK you could have bought at $2 on Tuesday. It's now trading, let's see, at $67. 67. It was 40 earlier today. So I'm amazed. And by the way, if you're here, I'm starting it up, but hit the thumbs up button already. Ooh, Daddy got a commercial as I logged in. We're getting a new bread machine, that means. 6 thumbs up, 14 people. So we got some bots in here, obviously. I'm going to start some scans. Big show. Big show. And let's just say I'm pretty happy about yesterday. Not happy about the 6-figure loss that I endured, but it is what it is. It was bound to happen. I've been very bullish, but I've also been warning people that this is what diamond hands are all about. So this is a buying opportunity. I do believe that, by the way, that it's a buying opportunity. So morning, DJ. Morning. Morning, Hunter. I gotta. But let's see where the Qs are. Qs in pre-market are actually doing pretty good. So if you see the Qs, this was when it's the surprise that nobody thought was. If you didn't know that a quarter point was coming, what surprised the market was the reaction to the bond market and the 2 cuts versus 4 cuts next year. But, you could have gotten out if you were watching the market, and if you're nervous about the market, and if you have stop losses, or if you do anything in the market, you could have gotten out. Why is this taking so long? BITW, crypto, and Bitcoin. Let's go back to brokerage holdings. See if this takes a long time to scan. It's got to be the custom thing or something. Morning, Jacob. So we got 9 thumbs up, 17 people. As people join, I'm just going to remind everybody, hit the thumbs up button. Yeah, this isn't even a blip on the radar. I'm going to go over kind of my thoughts on this one. God, what is going on? Let me refresh real quick. Let me log out. Oh. 639,530. Probably shouldn't have shown that, but oh well. Oh well. I think it's over now, but what? I'm using Chrome, and I'm just. Oh, we did the core portfolio. I'm trying to do brokerage holdings on the scans. Oh yeah, DJ. Two things, and I'll go over it more, but two real things about the overreaction. Is it an overreaction? I believe so. But what I'm not sure of, is it an overreaction for the overall market, or is it an overreaction for the short term? Long term, I think it's an overreaction. I think it's a buying opportunity. Short term, tomorrow is a triple witching day, and I have to just make sure I put in a link to what that is. So let's say energy leveraged ETFs. Let me just Google triple witching day. I think Investopedia is going to come up. Is there? Yeah, here we go. There we go. There is an impact in the final hour, and we're going to put that. Okay, and that is after stock index futures rise. So that goes there. Nope. Goes after there. Okay. We go back down to the bottom. Leveraged ETFs, QQQD, SQQQ, BERZ. Obviously, I mean, it's all bearish leveraged ETFs that got the entry in the 4 hour. Yeah, it was the reaction to the bond market. I mean, there was a 100 different things, and I've got a great thread from Twitter that actually goes over all of them, and so I think it was just a bunch of things that we're not gaining that one back in the next day. I don't think. I think if you look at a weekly chart and you look at the Qs on a weekly, we're in a red candle, and we've had a couple of red candles that haven't lost us confirmation. So as long as we don't go down below, I'd say that 5010, 510, 509, somewhere in that area. As long as we don't go down below there, I think we're okay. Obviously, it's just that's just a guess. But I would start to get a little bit concerned if we start to see a slow and steady downward trend. And that's going to take a while to play out. Am I selling anything now? No. I'm selling my Apple just as the it's at all-time highs, and by the end of the year, I just needed to get rid of a bunch, so I'm selling that. But I don't think that's a panic. I mean, we went full panic yesterday. That's what that was. It wasn't anything but full panic. I'll show the VIX, and we'll show everything. But the Qs still have you in. I mean, that candle right there, that afternoon candle, that's a 3.53%. Notice, there is not a large candle like that. August 5th, you had a 3% up on August 5th, which was the recovery. Well, the Japan unwind trade kind of, fizzled out there, but you don't have 3% afternoon candles. You just don't. So, morning, Brandon. And of course, Brandon has NUKK, King Degenerate over there. NUKK went down to 40 in the pre-market. I mean, and Brandon, I was just showing this. This is what's crazy. If we go to the 5-minute, I mean, Tuesday you could have bought this at $5. Tuesday you could have bought this at $5. And even this doesn't give the realm of volatility. But if you see yesterday afternoon, and then this is the 4 o'clock candle and it opened up, we went down to 40. Okay, you're at 67 right now. 67. Brendan messaged me on Twitter. He's like, dude, I've never had one like this. I said, it comes along once in a lifetime. Enjoy it while you can. But I don't expect this one to continue. But hey, I've seen stranger things happen. Look, it got you in at 12 and you're at 60 right now. 64. So enjoy it while you can. Okay. I am going to get started now. Larry, somewhere in Atlanta and Smyrna, there is an Asian girl saying, Larry. I don't know how the hell. Morning, Chris. I don't know how the hell you picked that one out. I think you said March or something. You picked it out. I mean, this is just true degeneracy, Brandon. That is true degeneracy right there. I don't even know what they do. My guess is it's nuclear power, but okay. There's 37 people, 21 thumbs up. Just remember, hit the thumbs up. Remember, if you listen to me on Spodcast or Spotify or any of the Apple or any, try and rate me. It does help. It does help. Okay, let me hit the record button because I have to go pick up fucking food at 11 o'clock. I have to leave at 10:30, so I still got to shower and stuff. Good morning. It is Thursday, December 19th. Does your butthole hurt after yesterday? All right, we're going to talk about the Fed. We're going to talk about the surprise that shouldn't have been a surprise. We're going to talk about some stocks that are good. It's a triple witching day tomorrow. I'll discuss what that is. We will talk about the Dow having 10 days in a row down. What should happen over the next couple of days and maybe next week, what's going into the first quarter. We will talk about NUKK and how on Tuesday you could have bought this at $2 and it's at $64. I think it traded up to $80. We'll talk about Taiwan Semi. We'll talk about a couple of other things. Some earnings yesterday. We had Micron. If you invested in Micron, my apologies. I tried to warn folks that, hey, that's... as long as they're not making money, that's a shit show. And my dumbass, I took it's funny, I took a social request yesterday. Mirian Technologies from Keimer, and I thought he was saying Micron. So my dumbass, but it's a reminder. If you're going to send me a social request to look at a stock, use the effing symbol, the symbol. Don't just send me a name. These eyes, they're 54 years old. I'm supposed to wear glasses. I don't. I can't see stuff. So let's talk about the Qs yesterday. And well, first off, how should you have played yesterday's market? You should have bet in the poly market that yesterday's FOMC meeting was going to start with good afternoon. If you want to watch this, I posted this on my Twitter. You can go and watch it. Literally, it starts every time. Good afternoon. He starts it out. And you can make money by betting on the poly market with that. And he starts it out every day. So how should you have played it? Absolutely, you should have played it there. Okay? We're going to talk about the VIX. We're going to talk about CNN Fear and Greed Index. But let's look at the chart. The reality is the chart pulled back. On the 4-hour, it pulled back to its 50-day. Okay? That provided some support. Where have you wanted to buy in the past? It was at that 50-day. But every time it's been at that 50-day, notice where the MACD has been. Okay, we're not there yet. What do I expect? I expect more weakness. The other thing is that if you look at the daily, okay, we haven't seen that type of volume since August. Okay, maybe in September we saw that type of volume, but we haven't seen that type of volume. For volume like that to come on a week where we shouldn't have seen volume, we shouldn't have seen volatility. That's where the issue is and the craziness is. Okay? The Fed wound up, we're going to go over this now. The Fed, 25 basis points, but they increased the inflation target and they said 2 cuts instead of 4 cuts. Guess what spiked? The VIX. Let's go look at the VIX because I want to show you what the VIX actually did yesterday. And here in Seeking Alpha, I registered now. By the way, if you want to register that top stocks of 2025, if you're a premium member, you will get that. But let's look at the one-day chart of the VIX, okay? Well, let's look at 5-day, because yesterday it spiked. And you can see right at 2 o'clock, it spiked. It spiked from 16 up to 27. We're coming back down. It's at 20. It's 25% below. How do you want to play this one? Well, there's a couple. This UVXY, UVXY, this is a triple leverage ETF on the VIX. Within 10 minutes, it was up 4%. Let's go and look at the chart of this one, because yesterday, if you just look at a 5-minute chart of UVXY, you can see 10 minutes it's up 4%. If I just take this and move this where it is, that's 27% in 2 hours. And yes, these are trades that you can take. It has confirmation. I talk about this all the time. Use the 9-day. That is a clear trade that you could take. So is today the SVIXY day? Because that is the inverse of this. If we go and we look at the after hours, look at how at 2 o'clock, how it just crashed and how it's recovering now. Do you want to take this one? I would wait until the market opens, because the likelihood of something happening when the market opens, like 9:30. If you remember back, if you listen to this show, hopefully you don't put in market orders a lot. Maybe if you want to buy something right now, you just put in a market order in the middle of the day. But hopefully at 4 o'clock yesterday, you're not putting in market orders to open up the day and you don't have after hours trading. That's just a fool's game. But there are a lot of people that still do that. And there are a lot of professional traders, and there's a lot of funds that are restricted in doing that type of thing. So they are putting on orders for a market at the open. That's why you see at 9:30, there's so much volatility. So what do I expect to see? I expect just to track it. Okay, the VIX shot up. If we go and we look at the CNN Fear and Greed Index, that one, we're back in fear. Just Google it. CNN Fear and Greed. That's why I did this, because you're back at fear. You haven't been extreme fear, but we're back at fear. What do you want to do during these times? I say buy. Now, it doesn't mean run out. Say you've got, $1,000 that you want to put into QQQ. It doesn't mean blow your entire nut at 520, 516, which is where it's at now. Okay, 500. It closed at 516. 520 is where it's at now. Doesn't mean blow your nut, because you could come down to that 515. If you come down to that 515, we break this 50-day. Guess what's the next support level? Could be 500, but it could be down here at 490, that 200-day. If you just look at the daily, we haven't reached the 50-day yet. That's at 506. Ironically, when you go to the 4-hour, what was the peak that we talked about? Right here, 506, 508, 503, 504. It's in that area. So don't blow your entire nut on this thing. You can trade around this with a very intelligent strategy, but make sure you have a strategy. And that strategy should include charting. And if you don't have charting in your strategy, then go to my link tree right now. The holiday special on Trendspider is still going on. You've got 3 days. Don't wait, because I know a lot of people, the last Black Friday sale, they waited. They didn't get the 71% off. They got the 67 or they got the 65. Why are you waiting? I mean, you have 3 days to save 71%. And if you haven't heard me say it before, I would urge you, for $15 more a month, okay? Take one-on-one course per month for $15. Get the advanced. The advanced, this service for $64 a month, they will train you how to use this tool. It's invaluable. And again, you can take one a month. You can take one a day. It's unlimited one-on-one. So you can set up these courses as long as they have a schedule available. And so you can do that. It is the best offer out there. I wish this offer, when I signed up for Trendspider, I wish they were doing this for me. Again, the sale is going on for 3 more days. I think it's Sunday or Saturday at midnight. Do not wait. The key is just don't wait. Don't wait. And if you want to pay monthly, go and have at it monthly. Look at those monthly prices, okay? Why would you pay monthly for advanced at $447 when you can get an entire year for $64 a month? But paying annually, they're roping you in. And I will tell people, technical trading, if you haven't learned it before, if you don't understand it and you don't know, there's a lot of courses out there on YouTube for free. Just go and Google it, learn about the MACD, learn about the Bollinger Bands, learn about moving averages, learn about RSI, learn about technical indicators. Stochastics are another one. You can even go to Trendspider University. Just Google Trendspider University, okay? Google it, because that's free and that's out there on YouTube. Go and learn about it. But if you want guided course, that's where this comes in. And you can learn all about it on the internet. Don't pay for a course. You're not paying this money for a course. You're paying this money for a tool and for you to learn that tool. So, again, the VIX spiked to 16. That was a 1% move right afterwards. We went up to 28, and we're in fear. This is the time when you start to add to your positions. This is the time when you start buying stocks that are on sale. The Dow shed more than 1,000 points. This is day number 10 where it's down. The NASDAQ, 3%. It hurt. I was down 6 digits, a good 6 digits. This is more than I've ever made in a year probably. So, again, it was a huge rollover. The fear was immense. This was panic. What happened was when he announced that it was going from 4 rate cuts to 2 rate cuts next year, and he mentioned the tariffs, it was absolute panic. It's a huge rollover. You don't see this type of afternoon candle on the 4-hour. It's a 3%, 3.53% down candle in the afternoon. And if we just go to a 5-minute chart, you'll see it. It's dramatic right at 2 o'clock. And we just went down. And so if you look at after hours, the positive thing, we've started to come back a little. But 9:30 is a long way away. I'm recording this at 8:48 in the morning. It's a long way away. So don't think that you're out of the woods yet, but I would start to be looking at buying. Have your watch list available. And that's what Trendspider is all about, is getting you organized with a watch list, with a scan, and with your strategy. Those are the 3 key things that you want, and Trendspider has them all. So why do I think fewer rate cuts are better, though? So here's the thing that you have to realize, and Tom Lee has mentioned this before. He thought they were cutting too fast. And the reason for that is if you're cutting slower, you expand the breadth of the market. So while it was great and it was fun to go up this quickly, it's not typically what happens. And so as you're going up that super quickly, you need to pull back. And when he said 2 rate cuts, everybody said, oh, I'm going to be fearful. But the reality is, if we're growing the economy's growing at a good pace, our job market is healthy, and inflation is in line, this may be the best that rates get. And if inflation does start to tick back up, that 1% that they just took away over the last 3 times where they cut it, 50 basis points, 25 basis points in November, and then 25 basis points, we could see that come back if inflation comes in. So, and remember, Elon said with the Department of Government Efficiency, there could be pain. And that's what you're starting to see with the potential government shutdown because they tried to slip in douchebag crap. Congress tried to slip in a pay raise for themselves and expanded health care for themselves. F you freaking Congress. I mean, I have a lot of problems with both sides, but when Congress is trying to slip that in, just F you, shut down the government. Give me some pain. Because I think you people, when I was employed, I didn't get a raise when I had a negative rating. And who does Congress work for? It's us. And they have a negative rating. Why should you get paid more? It's just my rant. Okay, let's look at this. Because here, what I talked about, the highest one volume day since August 5th bottom. That's it. Look at that. Look at that daily. Okay, on the S&P. Look at that. The election gap, we're back to the election gap. It'll be interesting. These are things that you want to watch for on a chart. And we can look at it in VOO. Let's go in VOO, my favorite one. And we'll just go to a daily. And I've got the gap snake here. So we're going to take a look at this. Where do we pull back to? Remove this segment. Where do we pull back to? There's the election gap. Look, the election gap. What provided support? The election gap. So is this support? Who knows? If the government shuts down over the weekend, we could get screwed again. But, again, I do think we are in the middle of a bull market. I think next year is a bull market. I think this is just an opportunity to buy. Now, if you want to know details about what happened, the Kobayashi letter, he did an entire thread. So first one, going into the Fed decision, why was there a 97% chance that this Fed cutting? If they didn't cut, we would have seen a 6% reduction in this. Their 25 basis points marked 100 basis points of the cuts in 2024. Is reality. In reality, today's market reaction has nothing to do with the rate decision. Rather, it was about the Fed's outlook. They shifted their inflation, and it's the outlook where they go from 4 cuts to 2 cuts. Meanwhile, the Fed raised their inflation rate. As we explained in December, it clearly back on the rise. In fact, 3 months annualized core CPI. And they're scared of inflation. And that's what Powell said is if inflation comes back in, we may see rising rates next year, not reduction. So what happened this morning? This is nothing to celebrate because the reality is it hasn't come back completely. It's not even 10% back from what it was. So I would be very, very cautious of this. And what do we have today? Let me see. Now things are coming back. Remember to keep an eye on bond yields. Okay, there's 3 things that you want to keep an eye on. Bond yields, VIX, and the Fear and Greed Index. I think quick moves in either direction in those 3 means an overreaction. It's a tradable event. But if it's a longer sustained holding of those 3 things, we could see a longer downturn and you could see Q1 be a down market. And it could be, again, we don't know what's going to happen with the government shutdown. We don't know what's going to happen with the Department of Government Efficiency. We don't know what's going to happen with a lot of things, the tariffs. So you want to keep an eye on those 3 things. If they start to spike, then maybe take some money off the table or have some dry powder on the back end so that during these dips you buy it. And if it's a stair step down, you've bought each stair step down so that when we do get to back up, it's a good thing. As a reminder, DIA, and I said this before, I think DIA is the spider, Dow Jones Industrial. Look, I mean, that's weak. That is super, super weak. Look at how the MACD has reset. Look at how the RSI is down at 17. If you wanted to buy that, I mean, have we seen the last time we saw this was May 10th. Okay. And look what happened May 10th. Does that look a little similar coming back to the 200-day on the Dow? That looks super, super similar. So it really depends on what your feeling is in the market. Don't listen to me. Don't listen to a douche. This is going to be, do you think that the market's strong or do you think that it's weak? If you think that it's weak, stay out. If you think that the market continues strong, start to get in. And at that 200-day, it's not a bad time to get in, but realize that's a 4-hour. We're nowhere close to the Dow 200-day. That is 409. That's still a 5% move down. So it could still move down there. Let's see. Tomorrow is Triple Witching Day. And if you don't know what Triple Witching Day is and what its impact is, these are good. Okay, the key takeaways of this article, and you can read the entire article. I'll put it in the newsletter. Triple Witching Day is the expiration on the same day of stock options, stock index futures, and stock index options contracts. Triple witching occurs quarterly. Triple witching days can cause a spike in trading activity as traders close, roll out. This is happening at a particularly bad time, government shutdown. We just had this huge reaction. We had this run up. So we could see more pain. You could see more pain. That is a possibility tomorrow to see more pain. Now, let's get more into stocks because I do want to point out, well, you know what? Let me see. Let me open up this one. Open with Google Chrome. Because I want to show you this particular one. Oh, I guess, did I copy it in here? Oh, no, I put it down here. let me see. We're going to go over this. I'm just going to do some editing right here in the notes so that they're all kind of put together. But I did want to show you this. This is NUKK, okay? Nucleus. I don't know what they do. I have no freaking idea. But we're going to look at this stock. And part of the reason we're going to look at this stock is because it has gone absolutely parabolic. And they just diluted yesterday, okay? Yesterday, it was up 327%. Yes, you're reading that right. It was up 327% yesterday. I put it in the newsletter. I said you could trade this one. I said this was a decent one that you could potentially look at. It is not covered in the quant. Financials, they have some revenues. Earnings, they if you look at the valuation of this, they're not making money. If you look at the growth, they're losing 51% year over year. If you look at their profitability, it sucks. Everything about this looks horrible. It is a company with $107 million market cap. But when you go over here and you look at this stock, okay, I'm going to put in NUKK. And I don't care about the 4 hour because there is no freaking way I'm trading this on the 4 hour. But this one has a $12 entry. Okay, and that was just Tuesday. That was just Tuesday or Thursday. And that was at $12. Today, right now, currently, you're trading at $63. Okay, almost 6 times your money. Put $1,000 in there, you all of a sudden have $6,000 today. But what I want to look at is the 5-minute chart. And I want to show you it during this time when you could have gotten this, because the reality of this is if you had gotten this during the start of the run-up and you had just played that 9-day, okay, this has lost confirmation several times, but this is Tuesday and this is at $2.26. And I want to remind you, you are trading right now at $63.50. $63, I repeat, $63.30. Is it a short squeeze? I believe so. And I believe that's why they're diluting. Stock dips after pricing $10 million in funds. But remember, they're pricing this at $6 a share. They are pricing it at $6 per share. It's trading at 60. So is it? I think it's a short squeeze. I don't exactly know what's going on. But just understand that this is an opportunity when you see this and you're sitting around and you're saying, hey, Gary, what should I trade? Well, if you want a 5-minute trade, you could put it in here as a watch list and you could just say in Trendspider, hey, alert me on a 5-minute when it's over, when the price closes over its 9-day, or when the price closes under its 9-day. Just tell me that. And we can even do that. I could do it for you. I'm not going to take you up because you're not going to see it. But you can do me a favor. Somebody with Trendspider, go back in and look at that. And let's backtest that for the last week. Just backtest it for the last week. Because I guarantee you're making money on that. Nucleus stock dips after they do that. Just keep an eye on NUKK. It's one of the hot sellers. Now, the other thing is, why do you go to Mar-a-Lago? It's for stuff like this. Because Trump will supposedly waive China's tariffs on Apple. Now, it's also rumored he's going to waive the tariffs for Tesla. Now, he's saying it's a competitive thing, but in reality, this is why you go to Mar-a-Lago. It's clear. It is clear. And that is why you do it. So we're going to shut that down. Trump's tariffs could not be priced in, and these stocks could be affected. I want you to take, if you have Seeking Alpha, I want you to read this article because there is a list of stocks. You're seeing them on your screen. A total list of stocks that could be affected by the tariffs. And I don't think, with yesterday's reaction, I don't think tariffs are priced into this market. And Wolf Research put together a basket of stocks that could be seen as potential risks among the proposed increase in tariffs with the Trump administration. So be aware, if you have stocks on this list, I would be looking at maybe the 4-hour algorithm. Let's look at Caterpillar in the 4-hour algorithm. We can take a look at this and say, hey, does this make sense to be out of? Yeah, right now, Caterpillar makes sense to be out of. It got you out with a 3% gain. In the 4-hour algorithm, you make 58%. In buying and holding, you make 59%. It makes no sense to do any other strategy other than the 4-hour algorithm as long as you're doing that. So wait for an entry, but I would be out of it. Honest to God, over the last 2 years, if you've made money in CAT, I don't understand why you wouldn't be doing something like the 4-hour algorithm. So I do think that the tariffs are not priced in, and I think this list provides you a good opportunity. Now, Taiwan Semi. This is one of the most resilient semiconductor names lately. If the sector does heat up, and we talked about SMH, which was showing some super weakness and just kind of sideways trading, and you're seeing it. It's just sideways. Taiwan Semi is in the core portfolio. I've said it before. If you can get this under $200, I think it's a good one. It's trading at $198 right now. The support is $185, but this is a buy and hold stock. This isn't something that you're just going to trade around. If you want to trade around it, the 4-hour algorithm over the last 2 years makes you 95%. You win 56% of the time. It gave you an entry a few days ago at 204. You're trading at 198 right now. So it might be a good time to get into that one. Again, make sure during this time we're waiting to see what the market does, that you have a watch list available. And that watch list, by the way, should include quantum stocks. Quantum went nuts yesterday. QUBT up another 52% yesterday. QBTS up 6% yesterday. Rigetti, which is RGTI, that was down 3%. That took out with the market. They're all down in pre-market except QBTS is up 6% in the pre-market. But all of them are popping. Make sure they're on your watch list. Okay? That one and NUKK should be on your watch list currently. And they should be on your watch list today. Now, earnings. I tried to warn people. Micron, it's just a hard stock to like. And you're down 11%. This has been down as much as 18% in the pre-market. And I just, the problem with Micron is that it just doesn't make money, and they offered, weak guidance. It's just not a great chip stock. If we go and look at the quant, it's a buy. Wall Street says it's a strong buy, but this has been a buy ever since 104, and in pre-market you're trading at 92. I would assume, look at the revisions. That's the problem, is the revisions don't indicate that the Wall Street says it's a strong buy because they're revising it down. So is this a buying opportunity? Maybe. It's under 100 again. But when we look at a weekly chart of this one, it doesn't give me hope that this one's coming back here to 150. It just gives me hope that it's sitting there at this 100. And again, that support level, remember these two back here in 2021 and 2022. It was used at using $100 as its resistance level. Now, what has it done? It's using $100 as its support level. But where's it trading right now? In pre-market, you're at 92. It's below that support. It's on the downside of the 9-day. I would be super concerned about holding this one any longer. Because the valuation, while Wall Street says it's worth more than it is today, let's see, strong buy, and they have a $137 price target on it, I would assume with yesterday's guidance that it will start to come down. So, JP Morgan picks their top stocks for a broader internet going into 2025. Large cap, Amazon, Meta, Google, and Spotfiy. Small caps, Take-Two, Exometry, Angie, Angie's List, Match Group, Getty Images, and Play Studios. So there's a lot of stocks that you can pick. Again, it's more top stocks for 2025. Social request. Like I said, I was the dumbass yesterday, and my apologies to Keimer. He wanted me to look at Mirion, M-I-R, and this is why I said you've got to let me know about the symbol. It's M-I-R, okay? And yesterday it was up 0.83%. Year to date, this one is up 70%, okay? It is a $3 billion market cap company, so it is a small cap. Let's see, what do they do? Provides radiation detection, measurement, and analysis and monitoring products and services in the United States, Canada, blah, blah, blah. I'd assume that these guys do like MIR machines or something. I would assume that. Now, the quant has it as a hold. Quant has it as a hold. It's been a hold just for a couple of days. It was a buy here at 18. You're trading at 17, right around there. But it's been a hold for a while. And why has it been a hold? Well, there's two categories in this one. It's valuation, which is a D. And you can see 44 times forward earnings, not great. PEG ratio going forward, 4.46. That obviously tells me that growth is an issue, which is a C minus. Okay, and why is it growth? Well, look at the EPS forward long. It's a D, 10%. Okay, and if we go and look at the virtual analyst report on this one and just pull this up and we look valuations, it's stretched with a price to earnings of 46, considerably higher than the sector at 26, including a premium pricing. Additionally, its EV/EBITDA is significantly leveled at 344 compared to sector medium 26. Then you go to growth. Growth metrics are mixed. Operating cash flow is strong at 97%, far exceeding the sector median 14%, showcasing robust operational performance. However, the company's earnings per share growth year over year is negative at minus 73%, indicating a declining in earnings. So for me, makes it an automatic trade. I wouldn't look at this one and say, oh my God, I've got to buy into this. So let's see how it is on the chart. Because again, this one's up 70% year to date. And you can see the 4-hour algorithm, it got you in at $9 here on September 16th. And it's been on a super, super, super run. Do I trust it? Well, when we go back and look at the weekly, it's just expanded. And I would say that MACD, it's never been up like this. I mean, we don't have a 200-day because it's still rather new. The RSI expanded too much. So for me, I'd probably stay out of it. To be honest, it's just one of those that's just run too far, too fast. So let's talk about scans. Some of the scans. We talked about Uber a lot. Uber looks interesting. It just got an entry in the 4-hour algorithm. The MACD is super low. The RSI is down at 37. It is an oversold stock. Be careful of this because that 61 is support. I'd rather see you buy at 63 to 66 than see you buy at 62 and have it come down here to 55. So I'd be a little bit nervous, but look at the MACD. I mean, the MACD on the weekly down at the oscillator, the RSI is at 39. You could see a nice little rebound in this one. I mean, even today in pre-market, I'm seeing a huge bump up in some of these names, like Cleveland Cliffs, 2%, Bank of America up 1%, Amazon's up 1%, Dell is up 1%, Google is up 1%, Goldman Sachs up 1.2%, IBIT, Bitcoin is up 1.8%, Lilly is up 0.12%, Meta is up 1.6%, MPLX is up 1.6%, Microsoft up almost 1%, Netflix 1.4%, Nvidia's up 2%, just over 130 again. PanW is almost up 2%. It's at 192. Palantir is up 3%. So you're seeing a rebound in this name. Tesla's up 2.7%. So you're seeing a rebound today, but it's still not making a run to where it was yesterday. Remember, Apple got to like 250 something yesterday. It's at 247. We can go and look at Apple for its daily day range. It got to 254, all-time high yesterday. Pulled back to 247. And you can see the quant doesn't like this one. The growth a D, valuation F, revision C. So Uber's one, J&J, and there's just a couple today. Most of the scans that I will put in the newsletter are leveraged ETFs on the downside. That's to be expected with the big move yesterday. So don't take that as, oh my God, we're going into a bear market. It's just to be expected because the 4-hour reacts faster than the daily. If we used a daily strategy, we might not be entering on the short side for another couple of days. With Christmas next week, I would be watching 3 things. It's the VIX, it's the 10-year bond rate, and we can look at this. I mean, on market data, you can go over to Seeking Alpha and look at this. You can look at which sectors yesterday. Yesterday, there were no sectors that were positive. There was nothing positive in the market. When you look at 1 month, technology is still positive. Consumer discretionary is up 6.14% in 1 month. Okay, communication services up. Everything else is down. When you look at year-to-date basic materials, which is Cleveland Cliffs, is down 0.11. Everything else is positive. Okay, but yesterday was a bloodbath. When you go to bonds, what you want to look at is you want to look at this 10-year right here at 4.544. Look at the change. Look at 1 month ago, it was at 4.41. We've gone up. That's not good, and most of that was yesterday. 3 months ago, we were at 3.73. So that's what I want you to look at. Remember, Trendspider sale is going on for 3 more days. And remember, too, all of those Seeking Alpha stuff, it's the bundle. The bundle's the best deal out there. You get both Seeking Alpha Premium and Alpha Picks. We did have an Alpha Picks sell yesterday. So if you are an Alpha Picks subscriber, make sure you check. You can check 2 places. Check your email or check in your, just go over to your premium service and you can choose on the left Alpha Picks. So if you have any questions, talk to me, just shout out. The link tree has all of my information. Okay, I'll talk to you tomorrow. Bye. Okay, let's see. Let's look at to-do. Morning, Harold. Yeah, QUBT went crazy. Morning, Sean. Yeah, there were a lot of Nathaniel. There were a lot. I mean, that's what's great about that 4 hour is you get those alerts. I somebody that doesn't have Trendspider, I don't get it. I mean, honestly, I say it all the time. That's what changed the game for me was just getting the charts and getting the alerts. There's 3 things in Trendspider that are key. It's the back testing. It is the charts. Well, I should say the back testing, the watch list, and the scanners. Those are the 3 things that it just automates your world. And so you can go about having a job. You can go about doing your life. You don't have to sit there and watch a chart. Yeah, but Matt, while you're hearing him talk about the good economy, remember, the economy isn't the stock market, and it's not the day of the stock market. We've run up so much, and there was so much assumptions that we're going to get 4 rate cuts, and that was priced in that, none of that should have been a surprise. What was a surprise was him saying 2 rate cuts, but the reaction shouldn't have been a surprise. I mean, look at if you go to we can go to QQQ. And that 5-minute chart, if you go to that 5-minute chart and just look at it, if you were listening to him and you saw it, I mean, at 14:30 when he started his press conference, QQQ was at 5:31. And when he said, hey, we're going from 4 to 2, smart people were selling. If you were day trading, if you're long term, you're not doing a thing. I mean, look at. Let's see a monthly candle. If you just go, and I love looking at these monthly candles because look, we're still green. You're still green. Still have a 1% gain. So I point this out, and the reason I point this out is because the reality of it is yesterday hurt, but look at if your overall portfolio isn't up for the year, you're doing something wrong. You're just doing something wrong. And yeah, I'm okay for shutting down the government, but it'll hurt. But SMCI, I don't have a price target. SMCI, here's the shit show. I mean, until you can tell me an auditor's in there and they've audited the results, the financial results over the last 2 years. I mean, how are you valuing it? There's no way. Oh, John, I watched Zip Trader Charlie. If you don't know, on YouTube where you're watching now, there's a channel called Zip Trader, and Charlie is the host of that one. And he went over AMD last night, and he made the case that AMD is one of the best opportunities out there. No. Hey, stop. He made the case that it's one of the best opportunities out there. I don't know that I'm necessarily in that camp. My thoughts on AMD are, I think for me, it's always been a trade. And so I don't mind trading it, but I'm not owning it. I've got, two chips? I've got 2 chips in my portfolio. I've got AVGO, Broadcom, and I've got NVIDIA. And other than that, I mean, my thoughts on AMD is I don't own it. So I'm not an expert in chips. I'm not somebody who studies the chip sector. I am somebody who understands it slightly, and I do understand how NVIDIA has such a lead over everybody. But I also think they have so much pricing power that I think others are looking for their own chips, mainly like Google and Google, Meta, Amazon. I think every one of those things are looking for other chips. And I think that's where Broadcom comes in. So you can't take an NVIDIA data center and all of a sudden just say, you know what, AMD's better. We're going to make a move to AMD. It's an architecture. And so, while I like AMD, I think Lisa Su has a good, a great team, and I think she's catching up. The lead is too much. But when those hyperscalers say, hey, we've got, and Satya Nadella even said it in a podcast, he said, we are not memory constrained. We are power constrained, which would mean nuclear. So, Bleed GZ, no, you can't use the 4-hour on TradingView. The reason you can't use it on TradingView, we've several people who have TradingView have tried it. I'd gladly sell it to you if you want it on TradingView, but you can't. It's just not. I don't think it's capable. So you'd have to make the switch to Trendspider. And yeah, Matt, I do think any reaction is an overreaction. But, I mean, any reaction is an overreaction, but also I will preface that with don't fight the Fed. Don't fight the Fed probably trumps the other one. Any reaction is an overreaction. So I think it trumps it, but I don't think that it moves you to a space where, oh my God, you've got to run for the exits. I mean, honestly, if you've been with me for a year, and let's just go back for a year and look at the 4-hour algorithm. We'll go back to January. I'll pull this back to January. If you've been with me and on the 4-hour algorithm, I mean, there's January at 407, great ad. There's February, great ad at 438, great ad at 448, great ad at 441, great ad at 426, and you rode that 426 all the way to July. Great ad at 471, great ad at 446, great ad at 468, great ad at 504, great ad at 508, and you're trading at 520. So if you've been with me all year and you've just used the 4-hour algorithm to add on this, again, you're up. Now, it does preface it by, hey, you've got to continue. But if you just look at a weekly chart, this isn't even a week that kind of stands out. I mean, look at that weekly candle. It's down 3%, and that's bad. But we've had 3% down before. You had, a few weeks ago, you had, 3.65%, November 11th, right after the election. You had a 3.26% down week. So I don't think that there's anything to worry about, but what should worry you is the volume of yesterday's move. And the volume of yesterday's move and the triple witching hour and things of that sort, just keep it on. Bleed Jeezy, I know nothing about options, so I can't tell you about Alpha Pix options. I'm too dumb to do options. So just realize that anything you ask me about options, I know nothing about. And Alpha Pix, it's a long-term buy and hold portfolio. I can't imagine that there's an options play in there, but if you can figure it out, the strategy is yours to have. The Santa rally is this week and next week, and this week being down 3%, I don't know that we have a Santa rally. You're going to have a lot of positive news come out, and you've got a potential government shutdown. I don't see a huge rally in the mix. I see us maybe getting back what we got, but I don't see a huge rally. Again, we're in this run where the 50 days moving up, the 200 days moving up, the 9 and the 21 are moving up. I mean, what more of a rally do you want? It's been a rally ever since the August lows and the September lows. It's been a rally. So, and nuclear is a great play. I mean, find something that works. I don't think you're going to be, find yourself on the losing end of a trade on nuclear. And with that, I am out of here. I got to put everything together because I got to go pick up some effing food. So, again, remember, I think Trendspider is the best. And Bleedsy, I don't understand why anybody's on TradingView other than D-Man's on TradingView. He's a regular listener. He refuses to get over to Trendspider because of the monthly payment is so high. But I tell him all the time that that monthly payment for the yearly, even though you're paying for a year, I mean, come on. NUKK, if you're telling me that let's just look at the 65-minute. The 65-minute algorithm on something like NUKK, okay? The 65-minute algorithm got you in at $3. $3. What, on Tuesday? And you're in this one still. It's at $67. That would have paid for your entire year subscription. So, and I don't think with all that Trendspider gives you, TradingView doesn't have an AI strategy lab that builds strategies for you. They don't have one-on-one training, unlimited one-on-one training. They don't have that stuff. So, and Trendspider, just from a customer service perspective, and this is why I went with Trendspider over TradingView. Trendspider stands behind their product 100%, and they are there for you. The Contact Us button in the bottom right is unbelievable. No matter which tier you're on, the Contact Us. Now, Advanced does get you phone support, and Enhanced gets you phone support, but I've never needed phone support. I've just used the bottom right because I want them to send me stuff, examples and stuff. Okay. Again, there's 39 thumbs up, but there's 58 people in here. So if you're not subscribed, go and subscribe. I'm here every morning, usually for a lot longer, but today I got to run. Okay. Take care, you guys. See you tomorrow. I will be back tomorrow. See you.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading